Hi everyone, and welcome to Funding a Better Future. This is a new series of bite-sized episodes featuring the expert insights of climate tech investors. My name's Cherry, and I'm the founder of Above and Beyond Recruitment. We partner with climate tech startups, and we help them to scale and grow, either by recruiting for them and helping them to grow out their teams, or by offering talent advisory and consulting services. And this series is aimed at founders and leaders of climate tech businesses, specifically anyone who's looking to raise investment this year. We're hoping to give you a realistic picture of the current investment market, as well as some tips to give you the best chances of fundraising success, and hopefully a network of individuals that you can reach out to when the time is right. Today, we are joined by Arjun Jairaj from AO PropTech. AO PropTech is Europe's largest VC firm focused on the built world. They back mission-driven entrepreneurs who are driving disruption in real estate, decarbonising the built environment and accelerating sustainable living. Arjun focuses on investment opportunities in smart building, energy efficiency and electrification, amongst others areas. And he's involved in researching, analysing and evaluating potential target investments across Europe and the US. With a background in M&A, due diligence, managing a startup and private equity investing, he has a wealth, no pun intended, of knowledge that founders can benefit from. So Arjun, thank you so much for joining me today. Are you happy to kick off by introducing in a little bit more detail the work that AO PropTech does, specifically around decarbonisation?
Absolutely, and thank you for having me, Cherry. I think you did a good job capturing what we are on the whole, but specifically within climate, the way we approach it is the built environment accounts for about 40% of greenhouse gas emissions, and that comes from both how we design and build these buildings, materials that we use, and the embodied carbon, but also the energy we use over the lifetime of these buildings. And so, when you look at it, the built sector probably is the single biggest lever for us to address climate change. And so we've been looking at that are addressing the entire value chain, from how we can design and build buildings better for the future, but also actively working on how we can make our existing buildings a lot greener, and maybe going above and beyond that as well. We're looking at how we can use technology to also optimize the way the industry can make its decisions and accelerate the pathway to change. Because as you know, real estate, construction, and allied or affiliated industries are rather fragmented, and so we see digitization as a key way of enabling this industry to really accelerate on its path to sustainability.
Fantastic. Yeah, and that summary there of 40%, that's a huge figure, isn't it? So like you said, one of the key levers that we can pull in addressing both the building of new buildings and then how we maintain and heat the existing buildings is, like you said, a huge potential solution there. Brilliant. So I'm asking everybody that I speak to throughout the course of this series the same three questions. And so your answers and your opinion on these would be hugely appreciated. So the first one being, what is your opinion of the funding landscape for this year? Anyone out there looking to raise? How should they be feeling about that?
Yeah, I think it should come as no surprise that for the sector venture as a whole, I think the funding environment has been a little bit subdued. There are a few challenges in the macro environment, and the big fallout that we've had since the rate rises and everything. But what we've seen is that climate has not only been resilient, but has been heating up. And sorry for those puns, but in many ways, this has been supported by unprecedented levels of sort of emerging regulation and state-backed incentives, and also for the first time, a broad sort of business and corporate buy-in into the importance really to be able to meet not only the long distant net zero targets that have been set, but also to make good on the intermediate and shorter term objectives as well. So it's safe to say that climate tech has sort of defied the odds, and we've seen while the broader market has seen a significant dip in overall funding volumes, I think climate has seen an increase. And this is not just isolated to any one market in Europe across the board, but also in the United States. And I think Europe has also had to deal with this more so because of the crisis in Ukraine, so the energy crisis that's sort of brought a lot of things to the fore, really. And so yeah, I think it's a good landscape, and in terms of valuations as well, I know that this is something that founders often worry about, and to a lot, to many degrees, rightly so. But we've seen climate valuations, while overall valuations have come down, I think climate tech businesses are still commanding a premium versus market peers, and uh, and that should make it easier on the board even for founders to access capital.
Good. Well, that's a pretty positive picture by the sounds of it. So good. Hopefully that will give some founders out there some confidence for this year, which I know has been a bit lacking in some parts. So that's well received. Thank you. And secondly, what are you kind of most excited about in the climate tech space this year? I mean, obviously, decarbonisation of real estate and PropTech specific, but within that, are there particular areas that you're particularly excited about this year?
Yeah, and before I dive into what we're really excited about for the short term, I think, we mentioned a couple of the things that we really like in terms of the energy transition. Energy, I think, is everyone's favorite sector within climate as well. But also, when we look at the built environment, we're open to opportunities across the life cycle. Some of the other statistics that are really always interesting, when you look at the waste from construction, I think it's somewhere along the lines of one third of all solid waste comes from construction. And so we're always going to be looking at a range of business models here, from tackling resource scarcity and things such as water, but also waste management and circular business models, because we think things such as reuse and recovery are just fundamentally what's needed at scale. And we continue to also look at emerging technologies, bio-based building materials, and breakthrough innovation. But I think for 2023 and the shorter term in particular, there's the two things that we're most excited by. First, the energy transition. I think as we see more sort of decentralized assets entering the grid, and EV adoption and the likes, we just see a sort of there's going to be a lot more complexity in managing the grid, managing these assets. The incentives and participation of new stakeholders have also changed. And so we think that there's plenty of scope and potential for businesses that are building solutions to tackle the administrative burden, and the new landscape of decentralized energy. So think about things such as billing automation, or managing these assets at scale, which really present very different systems, different problems to sort of current systems, where the centralization and the emphasis on utility and large scale generation just made it easier in some ways to concentrate, manage these costs, and manage the stakeholders. So when we see millions of people and individual homeowners now becoming not just passive consumers of energy, but also active participants in the grid, that creates a lot of opportunity for a whole bunch of new businesses and business models. And then I suppose the second big theme really is the retrofit opportunity. And this is another statistic that I always like to pitch, but it's somewhere to the tune of 80 to 90% of buildings that will have in 2050, buildings that have already been built today. And so while new build activity is fundamentally something that we like, it's just the existing stock of buildings is a massive opportunity. And we estimate, I think that's somewhere around the tune of $100 trillion in spend between now and then, to get these buildings to as close to net zero as possible. So a host of net zero technologies, and not just the technologies themselves, because I think those are well understood, the likes of heat pumps and rooftop solar, insulation for homes, but more on the tech-enabled businesses that are making it easier for customers to access this. So the B2C segment here is really interesting. For the first time customers, there's really no customer journey here and a consumer focused brand really, and so there's plenty of opportunity to build around that. And then for businesses too, I think I alluded to this before. Just it's a fragmented landscape, and there's complex incentives in real estate where it's split incentives. Owners and tenants are often not the same, and then you have a host of third-party service providers who maintain these buildings, who lease them and perform other professional services. So we think that there's a real need for technology to stitch the ecosystem together to create access to financing and access to the network of contractors and installers, and also advise on the ROI and everything on some of these initiatives, because the upfront cost of a lot of these systems can be pretty significant, and you're looking at ROIs that are sort of determined in many years. So it's going to be an interesting area as well.
Yeah, brilliant. So energy transitions then and retrofit solutions, but less the actual solid solutions themselves and more the technology that enables access and rollout of those solutions at scale. Brilliant.
Absolutely.
And in terms of the stage of companies that AO PropTech tend to invest in, do you tend to look more at the kind of pre-seed, seed, Series A? What sort of level do you guys tend to get involved?
Yeah, sure. Really, we're anywhere from post-seed, so about Series A to Series and up to Series C. But in terms of, we are flexible a little bit, and we understand that this is a space where there's not only an influx of sort of it's an emerging space, so sometimes we might be prepared to get a ticket a bit earlier. But I don't think we do too many pre-seed or seed, so I think we'll stick to what we know best.
Yeah, fair enough. Okay, brilliant. And the final question that I've been asking people is, what advice would you give to any founders in that space at that stage of their journey that were looking to raise this year?
Yeah, absolutely. I think, like I said, funding for climate has continued to be really favorable. I think for founders, the environment should be good for climate. It's just in some sectors might be a bit easier than others. Like I said, energy is top of mind, whereas things like maybe water or circular models on reuse might not be the most urgent or sort of topical themes. So there's going to be a little bit of variation in the sort of the experience that founders have. But overall, I'd say, because the market is favorable, because there are these immense market tailwinds and short-term catalysts as well that really, if you think about the IRA or the European Green Deal, which are committing hundreds of billions or up to €1 trillion in funding for climate technology, it really changes the unit economics of emerging technologies. So make these things profitable right from the get-go. And so sustained support like this is great to have, and we think that it only makes sense to capture the bull by the horns here. And so I would say raise and potentially also one of the things that we noted that was challenging for a lot of our portfolio companies in the run up to 2022 was the opportunity to get high quality talent. But since in the wake of some of the layoffs that we've seen in tech, I think there's a great opportunity to get some very talented people on board, and we've seen that with more climate focused businesses. It's easier to attract people to it because the mission is so significant, and people want to do good as well and have an impact. So it's always easier to hire for these roles, but now you have the ability to access some of the brightest people out there, and I think it makes a difference. So yeah, and well-funded companies, I think just it's always easier once you have the money in the bank. So.
Excellent. So hiring great people. Are there any other kind of parts of their business they should be kind of? I mean, when you're about to invest in a company, what are the kind of key key things that you would specifically look for, you think, that they need to make sure they're on top of across all areas?
Yeah, I think that comes down to sort of the stage that we're investing in. But I'd say that overall, and maybe I should have covered this as part of the previous question as well. But even though it's a great environment, I think the emphasis of a lot of investors has shifted in terms of really scrutinizing sort of the unit economics in a more clear pathway to sort of profitability or positive cash flows versus growth at all costs. And so with these businesses, I think sometimes it's important to get the basics right. So to be able to showcase, a pathway to get there. The interesting thing about a lot of climate businesses that are capital intensive is just that you're really using venture money to prove out, proof of concept, to do pilot facilities, but then you have they have the need to then demonstrate that they can access different pools of capital really and scale. So I would urge founders to sort of think about where their business model lies in the value stack. Software is going to be very different from hardware, and even within hardware, there's a difference between things that lend themselves more towards sort of like commodity and scale production versus things that are maybe more slightly more bespoke value add or high ticket. So there's a whole bunch of things to think about, and I think for us as well, it's just been this has always been important. So relying more on sort of financial models and trying to understand fundamentally if the business makes sense and not expect just scale outcomes to justify a business's ability to survive. And I think the other thing is it's been good in the sense that the fact that we're no longer rushing to close deals in a couple of weeks, I think gives both sides, both the founders and the investors, to sort of at least get to know each other better and to understand the businesses and what drives the investors more as well. So fit has always been really important. I think the pandemic made it difficult to build those relationships before investing. I think that often trumps a lot of other things as well. We see a lot of great businesses, a lot of great founders, but we like knowing that for the long period that we intend to be stakeholders, investors, and advisors to the business, that we're aligned with our founders, we're aligned with the long-term values and mission. So that's always important.
Brilliant. That's great. Thank you so much for that. And if anybody off the back of this kind of thinks, oh, okay, I think I'm doing work that they would be interested in, how can people get in touch with you? What's the best way to do that?
Oh yeah, you can always email me at arjun@aoproptech.com. We've also got a form through our website if you prefer. But yeah, always happy to meet founders who have done amazing things in the space. So.
Brilliant. That's great. Well, thank you so much for your time today, Arjun. I really appreciate it. I think there's loads of value in there for founders who are looking to raise this year. So I really appreciate you for sharing that with us. Yeah, thanks very much. Bye, everyone.
Yeah.